Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Did PayPal stock just flash an unprecedented value sign? Well, this is a question that John Quast actually brought to me. So, of course, I got to bring him on to talk about it. John, how are you doing? And why is PayPal such a value right now?
Yeah, hey, Travis, thanks for having me. This is something that I can't believe that I overlooked. PayPal has been trending down for over a year now, I believe, and trading at $69 per share. I didn't realize that it had dropped this low. And at $69 per share, it's about a $79 billion market cap. Why is that important? Well, for me, PayPal is a free cash flow machine and always has been. Since this company came public, it has generated a lot of free cash flow. Very simple payments business, very low operating expenses. However, over the last 4 quarters, they've generated about $5.7 billion in free cash flow. That means that the stock trades at less than 14 times its free cash flow. That is the cheapest that PayPal stock has ever been on a price to free cash flow basis. Now, here's why I find this particularly compelling. The company did not prioritize free cash flow over the past couple of years. It was very much in this expansion mode, trying to get into everything financial technology. Not everything worked out. Management saying, okay, we got a little bit too big for our britches. We're dialing it back. We're kind of going back to what is the core competency of PayPal and focusing in on that. And because of that, its free cash flow had been suppressed from trying to do all these other things. Now they're not trying to do as much. All of a sudden that free cash flow is coming back up. So the cash flow is improving, and it trades at the cheapest price to free cash flow valuation that it's ever traded at. To me, you're not being asked to pay a risky price here with PayPal at all for something that is a proven company. I know that you have thoughts about disruption in the financial technology space, and I believe that that is well-founded. At the same time, how long can PayPal continue to operate and generate a lot of free cash flow? I think quite some time.
Yeah, and just to put a couple more numbers to this, year-over-year growth in the third quarter of 2022, 11%. I think the two companies to contrast here would be PayPal and Square Block. Block is much more of a high growth company today, but it is much lower margin, barely generating free cash flow, at least from a historical level. And PayPal is much more mature, kind of knows what it is. So I think the interesting thing here is that you're looking at two different companies, that one is a cash flow machine, like you're saying, and the other one is a growth stock. Doesn't necessarily mean that either of them are bad, but they're just kind of in different phases. And so this is an interesting free cash flow story. What do you think they start doing with that cash flow? Because they do have some debt on the balance sheet. Do they start paying down debt? Do they buy back stock? Does this end up being a great dividend stock long term? Where does this cash end up going? Because I do see this as a very sticky business, maybe the kind of business that could grow slowly but surely over time, but maybe isn't going to be a world beater, which is okay from an investment perspective. But what do they do with that cash if this continues?
I think they go back to the old PayPal playbook, and that is acquire other companies, right? So you can debate whether or not the $4 billion acquisition of Honey was a good use of capital or not. However, that is a consistent trend for PayPal over the years as they buy other companies. They're not afraid to spend over $1 billion to increase their market opportunity. And Honey was very interesting in that they were really able to kind of pad what they were offering to merchants. And that is actually pretty key in PayPal's long-term strategy, trying to gather all of this insight into consumer behavior and package that data for their merchant customers. And so they were able to get a lot of those with Honey. I still think that part of the strategy is still playing out underneath the surface. But so to answer your question, free cash flow definitely goes to acquiring other companies, but also repurchasing shares. And so that's something that they have consistently done over the years. And they have stated that that is a goal for the free cash flow moving forward as well, and you look at that when your stock is cheap and you're generating free cash flow, you can buy back more. And so it has a greater effect of growing those earnings per share.
I want to touch on the disruption piece, because I do think this is something that we've been talking about for a long time, but the disruption that's potentially coming to the financial services space and financial transactions in general is that if something like the blockchain and crypto rails would allow you to transfer money from point A to point B instantaneously and at a very, very low cost. Now, to be clear, this would happen all in the background. So a merchant, just like a merchant sets up a Visa account and an American Express account when they start their business, and then PayPal is what you see as, the PayPal terminal or payment system is what you see as the customer. Same thing. You set up your Apple Pay or your Visa card or whatever, and then the money transfer happens in the background. You don't actually have to do anything with that. I think the argument for something like crypto would be that Visa, MasterCard, American Express, Discover take 2.5% to 3% of every transaction that these merchants are paying for. Now, they do that through a company like PayPal. PayPal is facilitating them, but they're actually using those credit card rails or even ACH rails, which would be the bank transfers. Could that be a disruptive force in finance? That's to be determined, but there are a lot of companies thinking about this, and a lot of banking executives, I will say, talking about the blockchain. So I think that is very notable, whether you care about crypto or not. The fact that these people are investing in this is really notable, because it's going to be disruptive to somebody in the space. Is that somebody PayPal, or is the advantage that they have that they're sort of the interface that a business or a consumer faces, and then they can figure out this blockchain stuff in the background? Would that be the right way to think about it, or how do you think about that potential disruption in finance?
I think that the disruption, if it's going to happen, is going to truly happen on a scale that matters after the regulatory framework is hammered out in Washington, D.C. So from a cryptocurrency perspective, right now we just don't have that there, and I think that is such a hurdle to adoption, even if the economic benefit is there. I'm talking on a scale that actually matters. So we're already seeing it happen here and there, but PayPal is still growing, right? Even as the cryptocurrency solutions are growing underneath the surface. So I don't think that you're going to have anything happen that actually gets to a point where PayPal says, ouch, we felt that. I don't think that happens until the regulatory framework is hammered out. And I don't see that happening right now. I see a lot of talk about it, but actually nailing it down to the point where it gets adopted, I just don't personally see it right now. So all that to say, I do think that there is room for disruption. When does that happen? I don't know if it happens. I don't know if PayPal says ouch for the next 5 years from crypto.
Yeah. Well, it's possible that that's just something that they start adopting. I do think they're in a very different position than a Visa or a MasterCard, the rails companies, who are extremely high margin because they have the network effect, and that's kind of it. But they're not providing any innovation. Most of the innovation is happening by companies like Block and PayPal, who are providing solutions to merchants. So that would be the argument for them. So I think that's really interesting. I like that one, John. A value stock that's still got quite a bit of growth. Double-digit growth is nothing to sneeze at, especially in this current economy. So what do you think about PayPal? Leave your comments in the comments section below. We'd love to hear from you, and I'll get John on the channel to see if he can answer some of these questions as well. Follow Rive Investing. We really appreciate it. Give this video a like, and we'll see you here next time.